If you're starting a business, should you set up a limited company or should you be a sole trader? We've not met before. My name is Helena. I'm a serial entrepreneur and tech investor, and I'm here to help you start a business and make more money. If you're following along with my January content series, today is day 21, and I'm going to run through the pros and cons of either being a sole trader or self-employed or setting up a limited company. Let's start with being self-employed. Pros of this: you can start immediately. And this is where most people will begin. There's very little paperwork involved in this. All you need to do is register on the government website that you are self-employed. You can do this alongside your full-time job and your employer will not know. And all you need to do is complete a self-assessment form by the 31st of January every year, declaring the income that you made in the prior financial year. So in the UK, that is up until April the 6th of the year previous. You won't need to pay corporation tax and you won't need to file any accounts to the government. The other pro is that it can be considered to be more private because your financial information will not be available on Companies House. Although I will share later that there is very little information from micro companies on Companies House. In case you don't know what Companies House is, it's basically just a website that keeps all of the information about all of the limited companies registered in the UK. The cons of being self-employed: you will have unlimited liability, which means if things go wrong, then people are coming to your door. You will also have limited funding opportunities. If that is something that you're interested in getting, you will only likely be able to get funding opportunities if you're running a limited company. And finally, most of the time, being a sole trader or self-employed is less tax efficient than being a director of a limited company. Biggest kicker being that as a sole trader or someone who is self-employed, you will be taxed on the profit that you make regardless of whether or not you withdraw that profit from your business bank account. A limited company is a separate legal entity to that of its shareholders or its directors, which means that you have limited liability for paying any debts that it incurs unless you have signed a director's guarantee. Limited companies also tend to be more tax efficient, where you pay tax on profits varying between 19 and 25% in the UK. You also tend to qualify for a wider range of tax deductible expenses if you run a limited company than if you are self-employed. And assuming that you run a company that has profit every year, if you choose to withdraw that as a shareholder, you will be taking that as a dividend, which incurs a slightly lower tax threshold than if you were self-employed. And finally, running a limited company tends to open you up to more funding opportunities, and it usually gives you more credibility as well. Now for the cons. Running a limited company is more complex. There is more paperwork involved than just filing a self-assessment every single year. You absolutely need an accountant to help you do this, and that accountant will incur cost. However, I think personally that a good accountant is worth their weight in gold. You also need to consider that if you're running a limited company, there will be information available on the public record, although the financial statements really are extremely limited. Personally, I have several limited companies and I work with the same accountant to manage the affairs of all of them. Hopefully, this will help you to make an informed choice around what is best for you.